Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name in Discord is Doug P. And especially for those of you watching in YouTube, if you have questions after the webinar, this is the best way to get in touch with me. There's also the Options-Doug chat channel in Bookmap Discord. That's a great place to post content, ask questions regarding the content of my presentation as well as the topics of the channel. And then finally, I'm on X, formerly known as Twitter. My name there is at Doug Pless. So this is my contact information, the best way to get in touch with me. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset, and setups can be taken, for example, in the S&P 500 with ES futures, SPY shares, SPY options, or SPX options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. So please feel free to post your questions and comments. My agenda for today, what I want to cover, what I want to talk about: economic data, events, and earnings. Then I'll go through my positional analysis. Then I'll review setups from this morning, and then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so economic data, an interesting day today. So let's start with that. So there were two services PMI numbers that came out, one at 9:45 and then this one at 10 a.m. And the first number that came out at 9:45 came out less than expected, also less than previous, but greater than 50, indicating expansion. And then this ISM services PMI that came out at 10 a.m. was greater than forecast, greater than previous, and also above 50. And this was good economic news that led to a very sharp move lower in the indices and everything that I follow. So we'll talk about that in a few minutes. So very sharp reaction after the 10 a.m. data. All right, and then that is the I don't think there's really any more significant data out for the remainder of the week. I know there are, the last time I looked, a number of Fed speakers speaking Fed members, FOMC members, speaking throughout the week. All right, let's start with positional analysis now. This is the S&P 500, ES futures, and Bookmap. Before I take a closer look at this chart, I want to take a look at a larger time frame. So let's take a look at SPX. This is a 30-day, 1-hour chart. For SPX, this is the August 18th options expiration. Put dominated, slightly put dominated, very negative gamma, and that the rally began then, making it all the way up to over 4,500 before the SPX consolidated, and then now is moving lower. So the negative gamma put Vanna fueled rally that began on August 18th has appears to have come to an end, at least for the time being. All right, so let's talk about some levels now. So first of all, dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. SPX trading below the lower weekly expected move. And then the dashed blue lines, that one may be hard to see, are showing the lower and upper daily expected move. SPX also trading below the lower daily expected move. The red, dark red horizontal lines are showing Spotgamma levels. These are proprietary Spotgamma levels, noting concentrations of gamma-weighted open interest. Spotgamma, again, this is proprietary. They apply their own algorithms to this. I'm going to point out the key daily levels. So first of all, there's the put wall at 4,300. That's the strike with the largest net negative gamma that can be expected to act as support. And the next level up is the volatility trigger at 44.75. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, like the last week or so, market makers have to trade against price to hedge their delta exposure in a positive gamma environment. So now it looks like SPX is trading below that volatility trigger. It was just slightly positive today. SPX gamma notional at 14.8. We'll take a look at that in just a moment. Slightly positive for SPX, and for SPY pretty significantly negative. So for SPY a shift, and once again we'll take a look at this from positive yesterday, slightly positive, to negative today. And then the next level up is 4,500. That is the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And then finally the call wall at 4,600. That's the strike with the largest net positive gamma that can be expected to act as resistance. All right, there was one for SPX, one shift in level, the 44.75 volatility trigger. That did shift lower. So 44.95 yesterday. Now the volatility trigger is at 44.75, and again SPX is trading below that level. And we can see that on this chart. Oops. This is SPX in a one-day chart. This shows SPX trading below the lower daily expected move, dashed blue line, right on top of the volatility trigger, 0 gamma level, and lower weekly expected move. All right, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes. Let me check for questions. All right, Gray asks, do the weekly levels change, or is it the only the daily levels that shift? The weekly levels do not change during the week. So I update the weekly levels once a week based on the close on Friday. And the daily levels, those do change every day. I base those on the close from the previous day. All right, so this is the ES futures in Bookmap. I have my own cloud notes. I have the SPX levels. So there's the 4450 level noted as support in the Spotgamma AM Founders note. There's the 4470 gamma level and the 4475 volatility trigger. I also have SPY levels. So there's the 448 gamma level, and then also the 445 put wall. And this is the reaction to the 10 a.m. data, a reversal lower at the SPY 448 level, and all the way down below the 445 put wall. Note there is a difference in price between ES and SPX. And the last time I checked this morning, it was 5 points. And it's about the same now. So ES minus SPX equals 5. So I'm showing the 4450 level, for example, here at ES 4455. And that changes a little bit every day. It gets smaller and smaller as the contract expiration approaches. And then after expiration, it will widen out again and then continue to trend towards zero. All right, so very negative reaction to the 10 a.m. data shown here with the arrow. Sharp drop right at the SPY 448 level and then down below the 444 level. And now it looks like price is chopping around the 445 put wall level. For SPY, there were shifts in levels. So the put wall actually shifted higher today from 440 to 445. The call wall also shifted higher from 452 to 455. So bullish shifts higher in both the put wall and call wall for SPY. We'll take a look at setups in a few minutes. I'm just pointing out the levels that are in play for today, both the SPY and SPX levels. And the reason I look at these levels is that these are the levels, the key gamma levels, where market makers are expected to react to changes in gamma and their hedging. All right, let's take a look at Nasdaq. All right, Nasdaq, I'm going to take a look at QQQ. Let's just isolate the QQQ levels first. So 377 is the volatility trigger for QQQ. And price broke below that level. right as the 10 a.m. data came out. That was good for a fast 2-point drop down to the 375 level, which is the absolute gamma strike. And now it looks like QQQ found support around the 373 level. All right, shifts in levels for QQQ, there were none. So all the key daily levels remain the same as yesterday for QQQ. And just for completeness, let's take a look at NDX. NDX, the levels in play. Here's the 15,500 level. NDX trading below that level. That is the absolute gamma strike. Then here's the put wall down at 175. There's a combo level just above that. So for QQQ, there were no shifts in levels. And for NDX, the volatility trigger did shift lower. All right, let's go back to Bookmap now. Look at NQ futures. So here's the break below QQQ 377 volatility trigger, and also NQ 500, and down to the QQQ 373 level. All right, so again, I have my own cloud notes, and I have QQQ levels, NDX levels. There again, we saw on the NDX chart, no NDX levels in play, and also the big round numbers for NQ, the zeros and the fives, or the zeros and the 50s. And we'll talk about, again, we'll talk about setups in a few minutes. All right, the next thing I look at in my planning process is gamma notional. This is market maker's position on the gamma curve at the beginning of the day. I look at the numbers for SPX, SPY, NDX, and QQQ, although NDX is typically not very significant. Note that SPX started the day just slightly positive, more neutral, and then SPY was pretty negative here at minus 793, and that both those numbers shifted lower from yesterday. Both were positive yesterday. So gamma notional yesterday for SPX was 313, now down to 14.8. And then also for SPY, gamma notional was positive 113 and now minus 793. This is market maker's position on the gamma curve at the beginning of the day, and then these numbers are essentially neutral for the Nasdaq. All right, let's take a look at the Vanna model now, and we can see a graphical illustration of what exactly this means. So this is SPY. I'm going to look at SPY today, the Vanna model. What this chart is showing is market maker's delta notional on the vertical axis, price on the horizontal axis. There are two curves on this chart. The first, the light gray curve, is showing how market maker's delta notional changes with changes in price only. And then the purple curve adds implied volatility to the equation. That's showing how market maker's delta notional changes with changes in price and implied volatility. And that change in delta with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. So what this chart is showing is, remember, SPY reversed lower right around 448 today. So let's locate that on this chart. So here's 448. So what this is showing is from this level, if price increased and implied volatility would most likely drop, there would be a slight put Vanna tailwind, meaning traders still are long puts. We know from a negative gamma environment that traders are long puts, market makers are short puts, and as price increases, implied volatility drops, market makers can buy back their short futures. On the other hand, if price decreases like it did today, down to around 444 right here, market makers delta notional will increase. This line is rising, implied volatility is increasing, price is dropping, market makers delta notional is increasing, and they have to sell futures to hedge their delta exposure. So that was what was helping to drive this move lower today, is the this Vanna model. Vanna works both ways. So this is typical of a negative gamma environment. So this is showing how market makers are trading with price as price drops, or with price as price increases and implied volatility changes. All right, so that's the Vanna model. We've taken a look at gamma notional. We know that market makers' position on the gamma curve at the beginning of the day, especially for SPY, was negative, and they would have to sell futures as price drops to hedge their delta exposure. All right, let's take a look at some setups now. I'm going to start with the S&P 500. This chart is showing the hero signal, hedging impact, real-time options, hero, H-I-R-O. This is from Spotgamma. It's available to Spotgamma subscribers. The chart is showing price with a white line for SPX and the hero signal. This is hedging impact, real-time options, showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, this is generally the signal that you want to take a look at. Spotgamma does provide separate signals for all of these instruments. I like to look at the combined signal. Let's zoom in on this so we can see what options traders were doing this morning. I'm going to zoom in just to the right around the open. So remember, data came out at 9:45 and 10 a.m. right there. So what this is showing is right after the 9:45 a.m. data, traders started taking negative delta positions. And hello Trinity, Holy Trinity, glad you're here. Welcome, and you're welcome for the information. Hope this helps. All right, so the data releases shown 9:45, 10 a.m. After the 9:45 a.m., traders started taking negative delta positions, and that led to a great short setup. Note that the options traders started taking positive delta positions right after the data. This is somewhat like yesterday, where that mean reverting options trades was great in a range day environment where they were buying the dips and selling the rips. This didn't work today. So as we zoom out, we'll see that they they gave up. So price did stabilize somewhat as options traders started taking, oops, wrong tool. Options traders started taking positive delta positions, baiting that move lower, and then price started to move lower again as they decided to join the party lower. So price actually started to move lower first in this case. So this was really a head fake, trying to do what they were doing yesterday, and it didn't work. All right, so let's go take a look at Bookmap. That off. I'm going to zoom in. Adjust the chart so we can see the first 3 hours. So we know around 9:45 a.m. traders started taking negative delta positions. Then here again, this was the reaction at the 10 a.m. data release, a sharp move lower. Options traders already starting to take negative delta positions. Just after the release, they started taking positive delta positions. Price consolidated, but order flow really never confirmed any kind of move higher. So notice that this yellow line here showing stop orders, there were no buy stop orders helping to fuel the move higher. This line continues to move lower. Also, large traders continued selling with iceberg orders. That's shown by the light blue line. So the best that options traders could do right around 10 a.m. was to consolidate the price. And I'm looking at Nasdaq, not ES. I'm sorry about that. Let's go to ES. It's going to be a very similar chart. So again, we'll go to the first 3 hours. All right, so a little bit different here. Nasdaq, large traders were selling with iceberg orders, and in the case of the S&P 500, right around this consolidation, as options traders were taking positive delta positions, that was really just a pullback to continue a short. Also never really confirmed by order flow. No buy stop orders fueling a move higher. Also cumulative volume delta remained negative. That's shown by the pink line, cumulative volume delta, and the yellow line, stop orders. So there were some large traders buying, but that did not have much of an impact on the S&P 500. With the stop orders and cumulative volume delta both negative. Let's go back and take a look at Hero. And we know around 10:25 options traders reversed their position and started taking negative delta positions. Let's go back to Bookmap. And price reverses lower at this cluster of levels. So remember, price move first here. You can see the shift in order flow. Aggressive buyers shown with the green volume dots, and aggressive sellers come in right at the lower weekly expected move and the 44.75 level and move price much lower down to the 445 put wall and below. All right, so that was the setup for today, just responding to the data. At 10:45 at 10 a.m. and also right around 10:20 with this shift in order flow at the lower weekly expected move, and then options traders started to join the party just a few minutes later. Oops. All right, so it looks like the support at the 4450, ES 4450 and the SPY 444 level so far is holding. Let's go take a look at Nasdaq. So I've already covered Nasdaq. Pretty similar pattern, reversal, sharp reversal lower at the 500 level and the QQQ 377 level, consolidation, and then price move lower. And in the case of Nasdaq, large traders selling with iceberg orders, sell stop orders never picked up and confirmed a move higher. A little bit more of a shift, positive shift in cumulative volume delta, but that turned over. All right, let's take a look at, go back to hero now. So we'll take a look at the correct hero for Nasdaq. So this is a combined signal for NDX and QQQ. And this was a much more clear signal for Nasdaq. Nice divergence, short. So here's the, let me zoom in just a little bit more. Point out the data. 9:45, 10 a.m. So right after 9:45 a.m., the data release, options traders start taking negative delta positions, and that set up a great short. So you could have entered right here and been prepared for the 10 a.m. data. Let's zoom out. All right, so that was the most clear setup for the Nasdaq. Nice divergent short. Let's take a look at one other thing. Let's go to QQQ. I'm going to zoom in on QQQ. All right, Carl and Holy Trinity, thank you very much for your support. I really appreciate it. Yeah, thumbs up. That really helps me, helps the channel. All right, thanks again for your support. All right, so what I want to point out here is this flow alert. Very timely alert. Came during this quick drop for QQQ. This is something that's new. It's in beta, and I'm on the list, the beta group. So I'm testing this out. Really like these alerts. There are quite a few of them. You have to keep an eye out for the instruments that you want to trade, but a very timely alert right at 10 a.m. for a move lower in QQQ or Nasdaq. So that was another clue, and you can see that again, it was a very timely alert for a move lower. So a divergent short as well as the QQQ alert. Again, divergent short alert. Great short setup. All right, so that's Nasdaq. Let me check for questions. All right, Holy Trinity, thank you very much for your kind words. You're very welcome. Again, thank you very much. All right, Nasdaq, NES, very data dependent. Good news is bad news. And in the case of Nasdaq here, this move lower was preceded by options traders. Let's just see what they were doing. Actually, let's go back to the combined signal. So they were buying puts. That's shown by the falling blue line there. We'll just zoom in here and see what that looked like. So at the point where this data release, the big drop came 10 a.m. This orange line showing calls was pretty flat. So traders were buying calls, but they were buying puts more aggressively. So the falling blue line is showing traders were buying puts, notional value negative 301 million. They were buying calls, 190.6 positive. So they were buying calls, buying puts. Put buyers more aggressive, and they were on the right side of the trade. All right, let's take a look at some stocks. And what I have done here is I have my watch list down below the hero signal. And I have ranked these by hero signal from weakest to strongest. And we'll look at these 4 or 5 stocks. And what this is showing, this is comparing the hero signal for today, that's shown by the dot there, with the hero signal for the last 30 days, that's shown by the entire length of that slider, and then the last 5 days, that's shown by the colored portion. So what this is showing for, especially for Netflix, Tesla, and Apple, the hero signal is the weakest that it has been in the last 5 days and the last 30 days. So this is a very bearish indicator for these stocks. So we'll start with Netflix. I'm just going to look at the hero signal for Netflix. I don't have it in Bookmap. Note 450 is the call wall, the key gamma strike. Price did reverse at that level. There was also a flow alert. Took a little while to play out. The thing, when you see that flow alert, thing to do was look for a reversal point, especially if a stock is volatile as Netflix, and the natural reversal point would be that 450 call wall. So just wait. You see the slightly falling hero signal initially, the flow alert, wait for a reversal point, and there you go, a short setup in Netflix. Either selling stock or buying a put spread, however you wanted to play that. All right, so that's Netflix. The next is Tesla. Zoom in again. And this morning, Hero was a strong driver price action. So options trades, market maker hedging activity, very strong driver, very high correlation between price action and options trades and hedging flow. Here's a hero signal that comes in. This actually was before the 10 a.m. data. So note that Tesla was weak from the open, even before the data release. Let's see what traders were doing. So they were buying puts and selling calls. Both these numbers are negative notional value, so they're buying puts. The orange line negative, so they're selling calls. Market makers take the other side of those positions, so they have to sell Tesla stock to hedge their delta exposure when traders are taking negative delta positions. Let's go take a look at Bookmap. Go to Tesla. Very sharp move lower at the open. And note the strong shift in order flow right after the 9:45 a.m. data. A lot of aggressive sellers come in right around the 252 level. Here's the 10 a.m. data. There was a little bit of consolidation, and then price broke lower again as aggressive sellers came in and took Tesla down to the 246 level. Let's go back and take a look at Hero. So the alert came in. Let's just check the time here. The alert came in around 9:48. So that was right around here. So after a pretty sharp move lower. So the alert was still a good alert, but a little bit late for Tesla. All right, the next is NVIDIA. Let's go take a look at Hero. Go to NVIDIA. Actually, Apple. That's next on the list. We'll take a look at that. So the order of this list changed a little bit since I was preparing this morning. Very bearish options trades, hedging flow in Apple. Hero alert in Apple, right around the same time as Tesla, 9:48. Let's see what in this. Note this was from the open, before the 9:45 and 10 a.m. data. So traders were initially selling calls, and they stopped selling calls, started buying calls, and that really has leveled off since then, but they have continued to buy puts, and that still continues now. So they've been buying puts all day, and the notional value for calls is also negative. So they net for the day, selling calls and buying puts, put buyers more aggressive. Remember, the alert comes in at 9:48. So let's go to Apple. We'll get back to NVIDIA next. I just want to go down the list in order. So here's Apple. The alert comes in right around 9:48. Very timely alert. As traders were taking negative delta positions, they were buying puts, selling calls, and Apple was moving lower below VWAP. Great short setup here in Apple. And Apple continues lower. Let's go back to Hero. Note the gamma strike. So 190 is the key gamma strike. 185 the key delta strike. And then 182 is the hedge wall. So that would be the natural target, actually 182.50 hedge wall. So let's go back to Bookmap, check that. So price is right at that level, 182.50. Note there is some liquidity at that level. The heat map is showing a history of the limit orders, so those are limit buy orders, and also more limit buy orders at 182. So the gamma level target 182.50, and then the liquidity target at 182 as Apple continues lower. Let's go back to Hero. And options traders continue to take negative delta positions. So they're still buying puts. All right, now let's go to NVIDIA. And traders have been taking negative delta positions all day. Although that activity that has leveled off, but net for the day they have been buying puts. Put buyers driving price much more aggressive than call sellers, but they're selling calls and buying puts. Put number 398 million, 399 million negative, and also call sellers minus 47 million. And note the very timely alert here. So just looking at this, it initially looked a little bit late, and you know, maybe it was, but there, you know, certainly there was a, if you were watching Hero hedging flow in NVIDIA, you know, you probably already found a way to get short. If not, this alert brought your attention to NVIDIA right at 10 a.m. And again, just like the other stocks, price action, Hero flow, negative before the data release. Hero alert comes out at 10 a.m. And let's go to Bookmap now. Go to NVIDIA. Tone down the volume dots just a little bit. Zoom in. All right, so if NVIDIA did not already have your attention, that alert came in right around 10 a.m. and still there was plenty of opportunity for a short. If you were fast, it was moving very fast. You know, from right before 10 a.m. 478 down to 470. So even if you caught a portion of that move lower, if you weren't already short, that would have been an okay entry for a short. All right, very bullish, bearish order flow. I'm sorry. You can just see all the aggressive sellers in here, right at the 480 level. All right, let's go back to Hero now. All right, so it looks like options traders have taken their foot off the gas. Hero has leveled off, price consolidating. Let's go back to Bookmap. So looking at the big picture, price maybe trying to move higher, but options traders not really strongly supporting that after that sharp move lower. And note that 465 is the put wall, level expected to act as support. 472.50 is the hedge wall. So it looks like NVIDIA is trading just below that level and did not make it down to the put wall at 465. All right, that's NVIDIA. Does anybody have any stocks they want me to take a look at? Otherwise, we'll go back and take a look at the S&P 500 and Nasdaq. All right, let's take a look at this reversal higher. So it looks like there was a stop run that's shown by the red dots there, down to around the SPY 444 level, also the 4450 level, ES 4450 level. You can see the shift in order flow. Mostly aggressive sellers shown by the pink volume dots, and then aggressive buyers start to come in, and then as price starts to move higher, large traders start buying with iceberg orders. That's shown by the light blue line. That's an execution, 2,683 contracts, 5 different executions, helping to move price higher. And that was right at 1 o'clock, just after 1 o'clock. Let's go take a look at Hero and see what options traders were doing. So let's go back to the S&P 500. So note the strong correlation between options trades, hedging flow, and price action. It looks like the dip buyers came in just right after 1 o'clock, taking positive delta positions, and price started to move higher. As aggressive buyers, we just saw aggressive buyers came in. And then the move higher was also supported by iceberg orders, large traders buying with iceberg orders. All right, Carl Jones asks, what does the put wall and call wall tell us? The put wall is the strike with the largest net negative gamma that can be expected to act as support. It normally does. And the call wall is the strike with the largest net positive gamma that can be expected to act as resistance. It normally does, especially for the indexes. So Spotgamma does have stats that show a negative forward 1-day and 5-day return for a breach of the call wall and a positive forward 1-day and 5-day return for a breach of the put wall. So I would suggest going to spotgamma.com, go to the free resources, and you can do further research there. All right, so Holy Trinity wants me to take a look at SPY. I can do that. So that is one of the components of the S&P 500 signal. So we'll take a look at SPY. So SPY is showing this sharp reversal higher in the hero signal. Very close correlation with price. Now back above the put wall. And you're welcome, Carl. All right, so Abu asked about NQ. So let's take a look. He says there was an alert on QQQ around 2 p.m. So let's take a look at QQQ. All right, no, so not sure how to interpret this. It looks like it was from the move lower in hero. Same for this alert right here. Let's go take a look at Bookmap. We'll take a look at NQ. Oops. Right, so for NQ, you can see the shift in order flow, aggressive sellers, moving price down, aggressive buyers come in at the 373 level, and now aggressive buyers are trying to move price higher, as we saw from Hero, not getting much support from options traders. But note this sharp rise in the cumulative volume delta shown with the pink to dark blue line as CVD changes from negative to positive. Consolidation around the 353 level, in between the 350 level NQ and the QQQ 374 level. Let's go back and take a look at Hero. So remember, right now we're looking at QQQ. Let's take a look at the total signal for Nasdaq. So pretty similar. Starting to move higher. So we zoom in, we see a stronger correlation. Hero levels off, price is consolidating. Now it looks like traders may be taking positive delta positions. We can zoom in and take a look at a a shorter look back period, rolling window period. So we're looking at the cumulative data for the entire day since the cash open. Let's take a look at just the last 30 minutes of data, and that doesn't really help. Just showing more of a difference here. So maybe now this little move in hero here is going to help to move price higher as options traders start taking positive delta positions, try and break Nasdaq out of this consolidation. Let's go back to the 1 day. Check for alerts. So there's the QQQ alert that Abu was talking about, 203. Let's take a look at S&P 500. So options traders are really a lot more aggressive here with the S&P 500. Very strong correlation between hedging flow and price action, helping to drive that reversal higher right after 1 p.m. Let's go to Bookmap, take a look at the S&P 500, and we'll wrap it up. All right, so we know that just after 1 p.m. options traders started taking positive delta positions. Aggressive buyers started to come in. Large traders with iceberg orders. And so far, price is up about 20 points from 49 to 69. And back above the SPY 445 put wall. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And I will see you tomorrow. Thanks again. Bye.